Hello everyone, this is Alex Gerchik, and we're beginning our session to learn probably and understand the market, especially the Forex industry. 2 weeks ago on 22nd of September, we had a meeting about the currency pairs, especially Euro, British Pound, Canadian dollar, and everything else. So what we're going to begin with, first, we're going to start with all of those performances. We're going to see it. If you remember, the last week I told you about that most of the currency pairs are right now in a very big range and they're not going anywhere. So let's see one by one if the market went anywhere. But at the end of the day, what I want to do with you, I want to give it to you the levels. After that, above that, or below that, the market is going to do something. So the most important thing is not to tell you what's been in the past, but what is going to be in the future. You know, we're not going to guess what's going to be with the euro or what's going to be with the British pound. We're going to try to understand where the market is going to go and what the market has to break in order to go somewhere. Because most of the time, a lot of people are guessing, you know, euro is going to go 135, euro is going to go 105, the Canadian dollar is going to go 73. We're not going to guess. I'm just going to show you the levels and you'll understand. So what we're going to begin with, we're going to start with the charts of euro first, then we'll go to a lot of different currency and we're going to go one by one. If you can see right now on the chart, that's last 2 weeks, we had a levels. The level of 111, that's a low part of the level, and the high part of the level is 113 to 114. If you're going to see right now, we absolutely have the same positions that we had 2 weeks ago. What does it mean? The euro, it's right now currently in a very big range and it's going nowhere. What must happen with the euro in order for the euro to go somewhere? If you're going to take a look, the euro has a level of 113.36. Where that level came out, as you can see, the most touches of the levels we have, the stronger the level is. And we had a false breakout right here. So for us, the most important thing is the level of 113.35.36. What does it mean? If the euro is going to break above 113.35, you know, I'm just going to write it down for myself. So next week when we're going to talk about, we're going to see how it works out. So euro 113.36. That's the high level for euro. If euro is going to break that level, close above, that's the most important thing. It's a closing above that level. That's the next stop. We're going to have 114. It's probably the next stop is 114.5 and 115, and we're going to go higher. Because obviously you should understand, when basically the currency or stock or a future or anything, it is within a range that somebody is basically building a large position, especially today. If you're going to take a look at the futures in euro, we had an abnormal volume, and this is just the beginning. The volume is going to probably go higher. So we have a higher volume today. So in a range, somebody is definitely accumulating the position. Basically, it's very hard to understand it's going to be a long or short. So most important thing, if we're going to know what levels it's going to be on the euro, then we're going to understand where it's going to go. So as I said, the high level for euro, it's 113.36, and the low level for euro, it's probably right now 111. So what do we have? We have a big range between 111 and 113. Once we're going to get out from that range, only then we can really say something about euro. In the meantime, a lot of you have questions. What to do when a euro or Canadian dollar or anything, it's within the range. When it's in the range, you only trade high channel and a low channel. As I said, the low channel is 111 and the high channel is about 113. So basically, when you have something in the range, you only trade from the range channels. It's a high level and a low level. That's the most important thing. My advice to you for the future reference, just I want to show you something how I trade, because most of the time people don't realize. That's what I trade. I trade on the levels. That's at least what usually I trade. You see, that's the day, long, short, price, and this is the a name. You know, I mostly a lot of times trade stocks or anything else. So if you're gonna take a look, there's a price, direction, and a name, nothing else. So my advice to you, and you know, I have a lot of things like this. That's what I do. You see, price, stop loss, and direction. So my advice to you, when you start trading, that's the stuff you have to know. You have to know what price should the euro be for you to understand and just to get in with the short stops. So that's what I do. I first put the chart, then on the chart I find the levels, and then basically I trade the levels. Then we go to Japanese yen. If you're gonna take a look, the Japanese yen did exactly what we said last time. It trades from the channel from 83 to 84. Back and forth, back and forth, back and forth. It had a false breakdown and a false breakout, but it means somebody is really getting a large position of it. And from here, we're gonna definitely see a distribution. So the most important thing is to go whatever short below 83 and to go low above 84. If you're gonna take a look, it most look to the upside for one simple reason. After a big run out, it started to consolidate. It's not going like straight down. It means nobody is getting out of the position, but it looks like it's accumulating the position for the way up. So the basically above 84.84 Japanese yen is going to look very attractive, but below 83, if it's going to close, as I said, the most important thing, not only a level, it's got to close below or above the level. You know, just a touch, not enough. As you can see, you know, once basically it's opening lower and the next day it's getting lower, basically then it's going to get destroyed. So if you're going to take the Japanese yen above 84 and below 83, we have a very important levels to work on. British pound. The British pound basically it's the one currency which is basically has its own life and it has a volatility. It's huge. If you're going to take a look, we do have level 151. It's right here. From 151 we did first run. From 151 we did second run. We went lower. So 151 it's a level. Right now, anything below, any closing below 151 is going to generate the short signal. I wouldn't bet right now in a British pound to go in a long side. I'm just going to write it down right now. British pound 151. Lower side, Japanese yen 83, 84. So next time when we're going to talk about the levels, we're going to understand what are we looking for. As you can see, the 151 is trying to work out, but the pound is not really going up. So usually, if the level is strong from that level, we're definitely going to see a high level up. But in this case, what we see, the level is strong, but we're not going above that level. So 151 is going to be a very crucial level for a British pound, and the second level, you know, much higher, it's about 155. So you have a very, very large channel for British pound, and hopefully it's going to work out. Canadian dollar. Canadian dollar worked exactly as we said before. We said that the Canadian dollar has a low level of 75. It broke down. You know, our traders did make money in it. It was a classic false breakout. Now it's going up. But the most important thing for Canadian dollar, as you can see, that's the high level of 76.67, 77. So Canadian is a 77. I'm just showing to you that I do write it everything down. So this way you'll understand that's what we're working on the numbers, and it's not just the numbers that we're not responsible for. So the most important thing, as I said, that's the levels. So we have a channel 75 to 77 where the Canadian dollars. Only when we're going to get out from the channel, only then we can really understand that something is really going on. Let's go to Australian dollar. Australian dollar really holds the very high level of 69, but only when we're going to go up 71, that's the only level. It's got to be broken in order for the Canadian dollar to go up. So what's going on right now in the whole market? And the whole market is a situation where the whole market is pretty much in the range, and you can see there's nothing much is going on for one simple reason. You see, that's the S&P. As soon as the S&P is going to get out from the range, let's say to the top side, somewhere between 1992, 1993. Only then we can really say that something is going on in the market and the buyer is there. Obviously, if the S&P is going to go, it's going to affect the dollar index, and the dollar index definitely is going to have an impact on all the currencies what we have right now. Let's see. Most of the time you're asking the question about gold. What's going on with the gold? Can you predict this large move on the gold in one day of almost $30? The answer is no. The answer is no. So what do we have in this case? This level was just in the news, guys, and you cannot really predict this level. You cannot really predict such a big price. But what we have a very large level on gold, as you can see. That's what it's coming from. You see, I especially put it from the left-hand side. So for you to understand, that's we're not getting the levels attract to the future price. You see, that's the level before. The level was 1145. We broke down. You see, it touched again. It touched again. So the hour level is 1145. What should we say about it? Once basically the gold is going to go 1145 and above, they can really say that the gold is going to go higher. Otherwise, we have a channel 1145 to 1100. What's the good part about trading in range? The good part about trading in range, you know exactly where it's going, you know exactly where's your stop, and you know the direction. That's the most important thing. So the beautification of the levels, it's you will understand where the levels are, and the most important thing, how strong are they. If you can see, for example, the gold before any run up, it stays at the same time for many days. Take a look in the upside right here. You see, before the gold started to crash, it was staying 1, 2, 3, 4 days pretty much at the same possible price, giving the seller a large ability to build a very large position. Here as well, take a look. At the same price, will stay for almost 6-7 days. Here as well. So basically, before the gold is going to run up, the gold has to do two things. First of all, either build very big base and go right from that base like it did here, or second of all, it's got to break 1145, stay above that level, and then basically go higher. Let's say future on oil. From the last 2 weeks, like we said before, the oil had levels between 44 and 48, very large levels. But as you can see right now, the oil still stay at the same level as it did before. What happened, even though the problem in Syria is escalating, and Syria is a big country for oil producing, nothing is going on with oil. So basically, it looks like the oil does not respond to any political problems, whatever is going on in the world. And it looks like if the problem is going to go slower, or it's going to go down, and it's not going to be a big escalation of the conflict, and then not another country is not going to get involved, we can see a price for the oil to go down significantly. But as we see right now, we have a oil price right here at about 47.25. So the oil CL, I'm going to put it right now, it's 47.25.44. Just to let you know a little bit about myself, I've been a professional trader from 1998, and I always figure out one thing. In a chart, there's nothing more important than the price. All I do, I trade the price. And I want to go back again to the page as I showed to you before. As you can see, it says breakouts and levels. You see, it says breaks and it says levels right here. I think personally, so no matter what you trade, each Forex currency pair or a future or anything always have a price, and the price is the most important thing. It does not really matter what you trade. If you're really going to put on the chart the levels and understand why particularly at that level the price has to do something, then you'll understand. The second thing to understand is the direction. Direction is much harder to understand, but how to understand the direction? Direction is understandable by one simple thing. You see in what part of the chart the price right now it's located. So if you're going to take a look at the oil, for example, where it's doing all false breakout to the downside, it looks like the oil wants to go up. But as I said, if you would be for that strong level at the upside, probably we can really bet that the oil price is going to go higher. But as I said, the escalation conflict in Syria did not really put for the pressure for the price of oil. It did not bring the price of oil higher. So we cannot really say that oil is going to go high. Anyway, this is Alexander Gerchik. If you have any questions, you can really write me. My Skype is Gerchik. And you can basically send me all the questions with the charts or anything, and I'll be more than happy to help you. We're going to try to do every 2 weeks of webinars that you'll understand by analyzing what's really going on in the market. And as I said, stop guessing, put the price, understand the charts, understand the direction. And if you don't understand, don't get involved. Because the most important thing, why the people are losing money? Just because they don't understand what are they doing. So my advice to you is very simple. Don't listen to anybody's advice. Put the levels, put the chart, and work only with the price. That's the most important thing. If you're going to find a good level and a chart with the right price and with the stop, just get in. It's been Alexander Gerchik. Look for the Wall Street Warriors so you'll understand my credential. Hopefully you're going to develop some trust and listen exactly what I'm saying. All the best.